Hi everyone and welcome. Today we're checking out the Wellington marketplace for the month of October compared to 2021 and 2020. This is Adam at Low & Co. Thanks so much for checking in. In summary folks, it continues to be a similar trend as we've seen over the last few months. Wellington market continues to stabilise. We definitely see a normalising market. In fact, the Wellington city market, where of course Low & Co operates, we have seen a stabilised, reasonably stable market since about July, and the rest of the territorial authorities, being the Lower Hutt, Upper Hutt and Porirua City, they are starting to show signs of normalising after continuing to drop in value over the last few months whilst Wellington City stabilised. My message to buyers continues to be, don't wait, get amongst it. If you can, find a property that works for you. If you can afford it, don't hesitate. It's not likely to get any better, I don't think. Let's start by looking at the median sale price. So median sale price of $828,000 compared to $1 million in October 2021. That's a drop of 17%. So no question, 17% is quite a big drop. But interestingly, if you look at the pattern over the last 12 months or so, or in particular the last 6 months or so, you see the median price has come down, and it dropped down to sort of high 700s, and then the last couple of months has been up back into the early 800s again. So we've seen it come down and come back up again. So over the last 5 months, overall it's been about sideways. So we saw that trend sort of taking place in the Real Estate Institute House Price Index. It wasn't quite as clear in the median sale price, but now it's becoming clearer in that regard. But as you know, if you follow these videos, I don't pay too much attention to the median house sale price because it is influenced just as much by the mix of properties sold rather than just the underlying values. So let's look now at the Real Estate Institute House Price Index, which in my view is by far the best guide to underlying values. And if you look there over the last 1 month, 3 months and 1 year for Wellington, in the last month we saw it grow actually by 0.1%. So let's just call it zero. So the market in Wellington, or values in Wellington, went sideways and they held their values throughout October. Now that's the first time we've seen anything but a negative result in Wellington region for a wee while now. And you see over 3 months a drop of just over 4%, and in 1 year almost 20%. Looking now at the 3-month figures, Wellington overall compared to the breakdown of the various territorial authorities. So 4.2% drop for Wellington overall compared to Porirua of 3.4%. Upper Hutt of 2.8%. Wellington City down 1.5% over the last 3 months. So that's pretty close to zero over a 3-month period. And the standout here is Lower Hutt, a drop of over 9%. So that's really a significant drop. If we look now at the 12-month results across the Wellington region, you can see the Wellington region values have dropped by almost 20% over the last 12 months. This is very significant. Porirua values have dropped 18.4%, Wellington City 18.5%, Upper Hutt almost 22%, and Lower Hutt is the standout at a whopping 26.5%. So while Wellington City has been fairly stable since July, the other locations have continued to fall to the point where Porirua has caught up with the city, Upper Hutt has surpassed it by over 3%, and Lower Hutt has dropped by 8% more than Wellington City over the last 12 months. When you consider or add in that inflation has been running at about 7% over the last year, this means Wellington City has seen real house prices, or real house values, fall by almost 25%. Lower Hutt has seen real values fall by almost 32% in the last year. So these numbers really are quite significant. Massive. Shaving off almost 1/3 of real house values in Lower Hutt in just the last year. That's $1 out of 3 almost. But as I keep saying throughout this video, the market conditions are now stabilising across the entire region, and the movements in the last month are much smaller. This can be evidenced also by looking at the orange line graph representing the 3-month value movements. This has been continuously recovering from the lows we saw back in May and June, steadily climbing back towards zero, at which point, as and when we get there, we will be back at parity compared to 12 months prior. So I expect to see values much more stable in the coming months than what we're seeing in this table here today, as we've seen in the city itself since July. And of course, time will tell. These are very difficult things to predict, but yeah, time will tell. Turning now to number of new listings monthly. This of course measures the amount of new stock coming to the market every month. In October, 618 versus 876 in October 2021 and 684 2 years ago. So this is a big drop compared to what we see normally in October. And this, what we're seeing on the ground, is starting to frustrate buyers, because all through wintertime, buyers were saying, don't worry, there's going to be plenty of stock coming on in spring, and it just hasn't happened. So we have seen, and we'll turn to this in a sec, but we have seen small increases in supply levels during November, but as in October, really no increase in supply level, new supply coming to the market compared to the earlier winter months, whereas normally you see a big uplift. You did see a big uplift in 2021, and that's how come the October result for 2022 is 29% lower than the same month a year earlier. So overall, this represents a tightening of the amount of stock flowing onto the market. Not great news for buyers, good news for sellers, and more evidence to support that the market is going to continue to stabilise. And this creates a floor, if you like, or a platform supporting values in the Wellington region. And you can see this in the next graph, which it looks a bit erratic. And what this shows us is what was the movement, what was the change in new listings this month compared to the 12 months prior. So a blue line above the horizontal axis means that we saw more stock coming to the market than last year, and a blue line below the axis shows less stock coming to the market than a year ago. So you'll see throughout the whole of 2022 until the last couple of months, we were seeing more supply coming to market than we saw the year previous. And just the last couple of months, we've seen a greater drop in new supply coming on, greater than 20%. So there's a big change around, and the red line shows the trend there. So from the start of 2021, we were seeing more supply coming on overall on average, and only just very recently it crossed back down through the horizontal line, back down to below zero. So that means overall in the last 6 months, we've seen less property come to the market than we saw in the same 6 months last year, a year ago. So again, good news for sellers, not the greatest news for buyers, and more evidence that the market is indeed stabilising and heading back to normal levels. How many sales are taking place? 587 in October 2022 versus 716 in October 2021 and 797 in October 2020. Let's throw 2020 out because the market was totally crazy then after lockdown. It's still 18% down on what we saw in October 2021. Now, sometimes the number of sales taking place is a guide to what is how is demand looking. Now, the exception to that rule, if you like, is that if there is less stock coming to the market, there is not as much to choose from, there is not as much to buy. And so that, of course, creates a constraint in the number of deals that can be done. So it's possible that is what's going on here. On the ground, we are not seeing a decrease in the number of deals getting done, or a decrease in demand, if you like. But perhaps compared to October a year ago, this was before the market had actually peaked, we're still seeing less deals getting done on that basis. Again, if you look at the graph, the bar chart there, you can see has increased over the last 4 months or so. The red line showing the overall trend has plateaued over the last few months coming out of winter. So although we're down compared to the same month a year ago, you can see from the numbers there that it looks like the number of sales have plateaued, they've stabilised, and it feels on the ground like we are now heading back upwards again. We'll see if the numbers show that. And again, indeed, this next graph does support that argument. We're still seeing the number of sales taking place is fewer than 12 months ago, but it's fewer by less. So we were seeing 30% less, 35%, 38% fewer, and you can see that in the blue bar chart. And now we're seeing, although it's less than a year ago, it's less by less, if you know what I mean. So the red line there, you can see it heading back up towards zero. Again, our market is normalising. How long does it take to sell a property? It's still quite a long time. 49 days is well above the average compared to 30 last year and 26 in October 2020. But again, look at the shape of the graph. The last 4 months, you can see it's taking less time to sell a property. 4 months ago, when was that? Back in July. July, we saw it take 61 days, and since then it's dropped consistently back down to 49 days. So still quite a long time, but heading back towards normal levels. In terms of inventory, how many weeks worth of supply have we got on the market? 16 weeks in October 2022 versus 7 and 6 in Octobers 2021 and 20 respectively. So 16 weeks, still a big increase over what we saw 1 and 2 years ago. But 16 weeks is about average compared to the long-term norms for the Wellington market. In this graph, you can see it's above average, but earlier than this graph shows you, going back 10 years, over the last 10 years, 15, 16 weeks is about average. And again, the shape of the graph over the last 6 months, you can see that it's consistently fallen from the high where we were at, I think it was 24 weeks again in July. So we've gone from 24 weeks worth of supply down to 16 in the last 4 months. Further evidence that the market is heading back to normal levels. It is stabilised. How many listings are we seeing on Trademe? So as of a couple of days ago when we were recording this, 2735 versus 1707 a year ago and 1307 2 years ago. So 2735 is still 60% more than we saw a year ago. That's a big increase. But again, you look at the shape of that graph, we saw Trademe numbers actually declining consistently over the last 6 months until November, where we saw it tick up a bit. Now, ordinarily, what we would see is a big increase in listings on the market, or an increase at least earlier, typically as early as September, certainly by October. We call this the spring rush, and the spring rush this year has been very late and very subdued, very muted. So if we look again at the next slide, which compares the movements in the increase or decrease compared to a year ago, you can see that quite clearly. Sort of 6 months ago or so, we had hit 160% more stock on the market than the year prior. We're now only at 60%. So it's still significantly more than a year ago, but not nearly more by as much as we saw 6 or so months ago. Again, the market is heading back to normal territory. So folks, in summary, Wellington values are stabilising across the whole region and the city itself. The values have been stable since about July. New listing volumes are low over the last couple of months in particular, and quite low. Sales volumes are down, but they're normalising. They're heading back towards normal levels. Duration to sell is still longer than a year ago, but over the last few months, reducing significantly, and the inventory is the same sort of pattern. The inventory is back to the average, having seen significant reductions over the last 4 months or so. Trademe listings are higher than a year ago, and they have increased over the last month, being a very late and slow spring, but that spring rush has been minimal when compared to normal years. Overall, as I keep saying, the market is stabilising. The market is normalised. Buyers, I keep encouraging you to get out there, take advantage of these conditions while you can. Don't wait for them to get any better. I don't reckon they are likely to. It's Adam at Loanco. Thanks for checking in. See you next time.